Hey traders, welcome to another video. Today, we are going to take a look at the exact analysis I do in order to get my absolute best trades. I do this analysis every single day, and it's led to some of the most accurate trading opportunities I've ever been able to find. In order to perform this analysis, you do need to know a few rules to keep things systematic and consistent. So today, I'll be letting you in on the exact rules I use for this trading system and showing you the currency pairs that I'm actually taking a look at for trades using this system in the upcoming week. So if that sounds good, then go ahead and click that like button for me. Go ahead and click subscribe if you're new so you don't miss out on any of the weekly videos that we do. And I'll be right back after the intro and disclaimer to share this entire system with you. Welcome back, and let's go ahead and jump right in. There are two main parts to this system, and that's understanding structure levels, specifically important structure levels. The way we understand those levels / the way we find them comes down to these two things: recency and frequency. So let me explain a little bit about what I mean by recency and frequency. Just understand as I'm going through this that we're basing the system around major levels of structure. We're using these two things to find those major levels. So if we have the market looking like this, let's just assume this is price, and price is pushing down, the first thing we need to look for is recency. So what is the most recent level where price was supported here on this market? That would be right here, correct? And what I'm looking for with this is the next level that price will hit inevitably if it continues lower. And that level, I don't want it to be like through price. So if price was right here, I wouldn't be looking all the way through price, all the way through all these levels at this level right here. That's not what I mean. I mean, literally, if this price is going to continue down, what's the next level looking down and to the left that price will hit of support that has supported this market in the past? So in this case, that level would be right here. Now, that is the most important part of this system. It must be a recent level, and we always have two different recent levels. If price is moving downward, you're going to have a recent level, which we consider the level down and to the left price will inevitably hit if it continues down, and we're going to have a level above price that price has just broken. You always have two. So with that being the case, right now, since we have our two recent levels, I'll go ahead and put a horizontal line here as well, because we can see, actually, before we keep going, the line of structure that you're going to use can go through price like we see right here for your trend continuation. So in this case, we have a market that just broke below a level of support. We're expecting that level to become resistance, but as we're heading lower, we don't want to be looking through all kinds of price before we see, oh, well, here's the support we're hitting next. You know what? Hopefully that makes sense. It's really hard to explain that, but essentially just look down and to the left, and this would be the level. It wouldn't be all the way back here. It's the most recent level that if price continues lower, it will hit. But as we can see that this is the most recent level of support that was broken by price. Now that we have recency covered, we want to ask ourselves, have these levels been tested multiple times? If they have not, then I don't look for trades at them. If they have been tested multiple times, then I consider trading opportunities at these levels. So this level we can see has been tested multiple times, correct? Now this level, has it been tested multiple times? That's absolutely right. So this is the perfect scenario for the system you're going to learn today. Meaning, if price was to push up and get back to this little zone here of structure, it would be a place I would look for possible short trades or selling trades to push the market down. If price continued lower, this would be a place I would look for a bounce out of price. So now we're going to go take a look at this on real charts. I just wanted to give you a quick overview of what we're going to be looking for. And I get this question a lot. Does this work on multiple time frames? Yes, all of them that I've ever traded it on and tested it on, it works. Does it work on multiple markets like stocks and crypto? Yes, I'll show you some examples of that and show you some live trades I'm in actually in the crypto and stock market using this exact system. But let's take a look at the euro dollar. Here on the euro dollar, we have an area of value or support, a major level of structure. I actually refer to these as OTZs or optimal trading zones. And this area is between 1.1737 and 1692. This is an area I'm looking for possible buy trades once we get into it. Now, the first thing you need to realize about trading in general, if you're someone newer or someone who is still struggling at trading, is that we don't just come to the market and start trying to trade the euro dollar right here because we really want to be in a trade today. And that's what we should do, no matter what time frame you're on. Right now, I'm on a daily chart. Personally, I swing trade, but it's the same case no matter what time frame you were on. If you came to the market and you didn't have a double bottom strategy right here, and this was the 5-minute chart, you don't need to be trying to trade exactly where price is just because you want to be in a trade. First, you want to prepare for what the market could do next. After you're prepared for what it could do next, which in this case is it could push down, your preparation for that is if it does push down, price will hit a major level of structure support. If price hits a major level of structure support, I can look for buying opportunities from that level. And what this does, this preparation, is gives you a better chance of winning that trade. Trading's all about either improving accuracy or improving reward to risk ratios, and this right here increases both. So why is this level in this green box an area I'm paying attention to for possible buy trades? If we look left, you can see that we have an area here that's been tested as support, as support, as support, as support. So what's likely to happen now is that if we get back down to this area, price should be supported, even if it's a little bounce, should be supported in this area. Now, part 2 of the system is I don't look at this time frame to trade, right? I'm looking on lower time frames. For me, since this is a daily chart, I'm talking 4-hour and 1-hour charts is what I look at when trying to place these trades. What this does is allows me to get decent reward to risk ratios, even if the daily chart only does what this looks like right here. We only get a small pullback. I can still hit targets if I can find a buy trade, stop loss, and 1.5, 1.4 to 1 reward to risk ratio. You can hit this target up here. You can try for targets however you'd like to, but personally I normally go for about a 1.4. This allows me to hit that 1.4 to 1 reward to risk ratio quite often, well above 55-65% of the time, and with a good reward to risk ratio above a 1 to 1 and that winning percentage, it's a recipe for success in trading. But that's what I'm looking at on the euro dollar. By the way, guys, here at first, what we're going to do is take a look at all the currency pairs I'm looking for possible trading opportunities, and I'm going to explain the system while I do so. So here on the Aussie dollar, does this look familiar compared to the graph we drew at the very beginning? If price is right here, then when we push down, inevitably we are going to hit what? This support level. This is the next level. Then I ask myself, after recency, that was a really bad looking R, but after recency, what's the next question? Frequency. Has it been tested multiple times by this market? That answer is yes when it comes to this green zone. Now, some of you who are newer might be asking, Stephen, why didn't you use this zone? Well, I've explained this a lot in other videos. I'll explain it a little further here. This is nothing more than the swing low of a downtrend. If we are in a downtrend and the market is pushing lower, then this level is very likely to be broken. With that being the case, do you think we need to be trying to buy from this level? This is a mistake I see beginners make all too often. They're trying to trade from levels of support that aren't really support. Yes, this was support, but it's more so just the swing low of a downtrend. And if a swing low is likely to be broken, then it's not somewhere we want to try to buy from. Instead, we want to look below that swing low and to the left to the next level that is actually support. And again, we want to combine that recency with frequency. So for the Aussie dollar, that is why this level between 0.7243 and 0.7194 is a level I'm paying attention to for possible buy trades throughout the week. If we get a big push down, I'll be looking in this area to possibly buy. And we don't just buy in these zones. I'll go ahead and say that too. We have very specific entry reasons that we use in these zones in the EAP Training Program and for the Pro Trader Report. Now, if price pushes up, just as we looked at on our illustration earlier in the video, what is the latest level of structure that was broken in this downtrend? Right here, right? Now ask myself the same question I always do, which is recency, check. We got recency. What about frequency? Yes, it was tested multiple times looking left and more if we look further left. So We have a recent level that has been tested multiple times. That is why on the Aussie dollar, I will be looking for possible short trades out of the zone between 0.7483 and 0.7443. Moving on now to the Aussie Canada. Here on the Aussie Canada, we actually have an area that I pointed out last week in the Pro Trader Report, which is something that our VIP members get every Monday. And this area has already started to provide some resistance. I'll throw a photo up of that looking left here. But right now, just try to ask yourself why I would be interested in this level between 0.9287 and 0.9245 for possible short trades. Why would I be looking to sell there? Well, if we think about it in the same way we have been the whole video, recency and frequency in this downtrend, what's the latest level of structure that was broken? Right here. Was this level tested multiple times? After recency, we look for frequency. Yes, it was. 1, 2, 3, 4 looking left. Yes, this is definitely a level I want to pay attention to for possible short trades, right? Now, this level here, that is 0.9144, was also in the Pro Trader Report last week, and we got extremely close to that level, almost to the pip, before pushing up. Now let's talk about the reasoning, just so you can have a good handle on this entire system. When price was, let's actually use market replay, makes it easier for me to teach. When price was right here, if I was looking left, down and left, what is the next level of support that would be hit by this market? It's right here, right? This is the next level of support. So has this level been tested multiple times? We now know it matches the recency bias. Was it tested frequently? Yes, it was. So with all of those factors coming together, having a level of structure that not only is the recent level, price will touch if it continues lower. That is inevitable. Price will hit this level right here first if it continues lower. So with that being the case, and with that level being tested frequently as well, we actually had a nice level and price nearly got to it by the pip before pushing higher. Next up, and the final Forex pair we're going to take a look at before we start looking at stocks and crypto is the Aussie New Zealand. And I left this one blank because at this point you should have a pretty good handle on what we're looking for. What would be the first thing we do? So we're looking for trend continuation levels. That means if the market pushes up, since we are currently in a downtrend, we would look for a level that will push the market down. We're also looking for counter trend levels, which means if the market pushes down, we're looking for a level that would push the market up. I kind of gave it away with those two lines, but where do you think we would be looking for trend continuation trades? Well, where's the most recent level of support that was broken? And I know this looks a bit jumbled, but essentially it's right in this area. So what we do is just place a horizontal line in that area. We look left, and we ask ourselves, was that tested multiple times by the Aussie New Zealand? The answer is yes. And then we just create a zone out of it. And the zone, I don't have super specific rules. This is the most subjective part of currency trading or of trading using structure on any market is creating the zone, but you'll get better at it with experience. Just start practicing. But here, do we have a level that was recently broken? So the most recent level, as in if price pushes higher, is this the level it will hit next that we broke below? Yes, it is. Next up, was it tested frequently? Yes, it was. So with those two factors coming together, is this a level we'll pay attention to for possible trades? Or I will pay attention to for possible trades? Yes, it is. I'll be looking in this zone for possible short trades to continue this downtrend. Now, price can do something else. What is that? Either go up or price can decide to go down. If price decides to go down, where is a level I'll be looking at to trade from? Well, this level kind of sticks out like a sore thumb, doesn't it? This level, being a major level in the past, means that I definitely want to pay attention to it for possible trading opportunities. And if we look left, we can see a few other times that this level was tested. So whenever I said earlier the rule about going through price, I just need my most recent level to not go through price. If the other levels that I have looking left have went, I guess you could say through price. This is a weird thing to explain, but have went through price. Hopefully that makes sense. Then that's totally fine. I can have these levels being through price. I just don't want my recent level to be through price. Okay, so with that being the case, this is a level I'll be looking for possible long trades in just for a bounce on those lower time frames. Now, if you were on a different time frame, let's say you're a day trader, you may look for these levels on the 4 hour or the 1 hour charts, and then go down to your smaller time frames like 15-minute, 30-minute, or 5-minute charts to actually place trades. But that's it for the examples on currency pairs. Now we're going to take a look at a couple of stocks that I'm in with live trades in right now, and some cryptocurrencies that I'm in with live trades as well, using this exact system. Let's take a look at that, and I'll see you there. Okay, so firstly, let's go through the crypto market, and I'm going to show you my live trades that I'm actually in based on the system you're learning throughout this video right now. So I'm in a trade on Cardano, AUDNZD right now, and here you can see my order, my buy trade at a price around the 1.269 level. And that trade was executed 13 days ago. As I said, I am a swing trader. So now let's go over to the Cardano chart on TradingView, just because it's a lot easier to teach on that. And it's the chart that I do all of my analysis on. So here we are on that chart. And this trade was more of a day trade. I actually placed the trade on the hourly chart, but I was looking at structure levels on the 4-hour chart. So firstly, here we are on the 4-hour chart. The first thing I was looking for in the crypto market before getting back in was breaking into new highs. We started to do that here. Started breaking into new highs, new highs, new highs. Is this level right here a recent level? Right here is the level that I'm referring to. It was, right? It was the level price broke above to start this new uptrend. What's the next question we have to ask ourselves? When we scroll the chart back, let me actually use a horizontal line instead of a ray right here. And I can use this one. So now we just scroll the chart back, and then I asked myself, is this an area that has been tested multiple times by the price of this asset? And again, this works for all different markets, crypto included. And the answer is yes. We have a recent level that was tested multiple times looking left. And as you just saw, what I did was wait on this trade to come up, break into new highs, pull back to that exact zone that I call an optimal trading zone, or OTZ. And then I looked on a smaller time frame, specifically the 1-hour chart, for an entry here. Now, I'm actually in a few other live trades in the crypto market based on this system, but this video is already much longer than I expect it to be, like all of my videos end up being. But I will share the chart with you here of Dogecoin and let you in on exactly what I was looking at. So this is my entry here on Dogecoin, and the reason I was interested in this, again, is because the market pushed up, started to create new highs. At that point, I'm looking at the most recent level of structure that was broken and asking myself, was it tested frequently? In this case, this trade matched all of that. So once we got back down to this area, I went ahead and placed a buy order based on an entry I got on a lower time frame. Something else that was really cool about this is this push up actually came from another major level of structure looking left. So if we scroll the chart back, you can see that this was a level that also was tested multiple times by price here on Dogecoin. So that's a look at how this system would work in the crypto market. Let's take a look at the S&P 500. Here on the S&P 500, I actually got involved pretty heavy in a long-term investment account that I have in an index fund based on the SPX right here at this level. Now, why did I do that? What was my reasoning? Well, the price of the SPX had been pushing higher, right? So now that we're pushing higher, I want to look at the most recent level that was broken, which is this level right here. I then want to ask myself, has this level been tested multiple times? Considering that the answer to both of those questions was yes, I decided to go ahead and jump in with a large position in a very long-term investment index fund that I have. This is not a swing trade, and this is not an investment that I will most likely ever be taking out, but I did wait for this exact same strategy, and I'm just showing you this so you understand that this not only just works in the stock market or just works for swing trading or day trading, but also works if you're someone trying to manage your own funds. Now, when I say works, I don't mean go out here and just start trading this blindly. There's a huge process that goes into trading for a profit. And if you just go out and start trading what I showed you in this video blindly, you will likely lose money because you don't understand the other aspects of trading. A good strategy is necessary to make money, but it's not the only thing that's necessary. Some of you who are longtime subscribers may have seen this before, but I call this the triangle of trading success. Pretend every trader making money is in the middle of this triangle. These are the three things they've mastered. Strategy that makes money over time. They've mastered their risk management. They know their risk tolerance. They have a good understanding of what risk capital is, which is the amount of your net worth you put into speculative trading like Forex or crypto. They understand what risk per position means, and they have a good handle on the maximum drawdown that their system may have. And they only get that through the process of back testing, which is something that you'll need to go through as well. And also you need to have a great understanding of trading psychology, and you need to demo trade and back test and have a good risk management plan along with a strategy that makes money in order to have good trading psychology. So as you can see, it's not like the only thing you need is a strategy, but I did want to share with you what I'm looking at for this coming week. And also, before I do that, if you're looking for help with all of this, I actually have a brand new, completely free beginner course. Yahoo Finance just did an article about it, and it will be linked in the description below under free training. It's a complete course. It's over like 5 hours of content, and it can help you out with each of these. So if these are some of the things you're struggling with, then definitely check out that free course in the description. We also have a paid program called the EAP Training Program. So if you're ready to step up your trading and you're ready to purchase some type of mentorship, if you think having some one-on-one contact with me would help you accomplish your trading goals, then you can find that linked in the description. Again, that comes with what we call priority email, which is your personal contact with me. That also comes with a full training course teaching you how to master each and every one of these. And it comes with the Pro Trader Report, which is similar to this video, but I do it every single Monday for subscribers of that program. And it comes with 3 to 5 trade alerts per week. The best part of the EAP training program, though, is that you have a 60-day money back guarantee. If you, for any reason, do not enjoy the program, all you got to do is email my support staff and I'll have them get you refunded ASAP. If you're interested in either of those, they are linked in the description and the links for them are on the screen now. If not, that's totally fine too. Just make sure you keep it subscribed and locked here at the Trading Channel, because we come out with content like this each and every week, and I would hate for you to miss it. Go ahead and click that like button if you made it to the end, comment below, and I will talk to you guys in the next video. See you soon.